Yeah.
Order filled, check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
What's up, guys? Andy with Mighty Soldiers Trades. We're here on an incredibly crazy day with Gianni DePoce. Did I say that right, Gianni?
You did.
I want to make sure I say it right. I'm always messing up people's names, or at least thinking I am, and it's got to be the most stressful part of my job. Yeah, I get all these different names on here, and I'm like, man, I want to do it right. I want to do it right, and then I'm like, oh, I just mangled that. I just tore that up.
Oh, we can call that a happy problem, Andy.
So yeah, that's not a bad problem to have. And so today, man, we had banks halting all over the place. I believe we had hundreds of bank halts all on this SVB deal. Do you have anything to say about that?
Well, banking's changing. It's funny when you look at the history of just money in banking in the United States. You know, the FDIC basically came out and said they're going to backstop all of the SVB deposits above 250K. And then, you read comments online like, well, why would you put more than 250K with an individual bank? It's like, well, companies have payroll, and you're not going to have 10 banks processing one, company's payroll. So, there are practical issues to that. And it's more of a confidence thing. And, 250K is kind of an arbitrary number. So, do I appreciate supply and demand mechanisms in the market? Absolutely. But I do love to make fun of like the free market people, because a free market has literally never existed. Throughout all of history, probably the closest thing we ever had to a real free market was the era of wildcat banking in the United States, which was like in the 1830s to like the 1850s or 1820s to 1840s. There, that was during Andrew Jackson's time when he destroyed the Second Bank of the United States. And there were issues with that. There were a lot of bank failures in that regard. So, this ties into crypto too, because, the whole talk of decentralization and centralization, there is a little bit of centralization is good. It does protect the average individual that is not financially astute, but too much centralization like we have now with the Fed does carry its risks. So, it's all about finding the happy medium. But I do think that a lot of this crisis is overblown in the short term. People calling this another 2008, I think are just fear mongering at this point.
Well, I'm not afraid. I've been going long all morning. I have over 1% on my account this morning. And like I was just telling you, every single time that I go live or I do anything, I mean, dude, I could be taking out the trash. I could be helping my wife in the kitchen, mowing the lawn. It doesn't matter what I'm doing. Yeah. Anything I do, that's the moment that I should have been putting on a trade. And right now, as you can see, we just broke the 200 on the 5-minute here for the ES. MES I'm looking at actually right now, but SPY, I'm always looking at SPY. I go off of the SPY when I trade any sort of futures. That's the chart that I love to watch. I know that they can diverge at different times, which is an outlier event that would probably be catastrophic if sometimes it can be pretty catastrophic. But anyways, so some pretty good trading this morning. I'm looking at this market long still, and until it proves otherwise, I'm still pretty hopeful for pretty nice several days in the future that are going to be nice for us anyways.
Yeah. Well, I think there's a couple emerging themes that we need to pay close attention to coming out of a potential low here. Obviously, we need to see how we close. The close is the most important data point in the day's price action. But a couple themes. Precious metals, number one. This type of currency banking instability is, quite frankly, a dream for precious metals. Precious metals thrive on uncertainty, and it's basically the hedge against fiat currency. So that's a big theme. I think the dollar is going to start selling off a little bit more, which in turn is going to be a boon for international markets. So I think we have to be overweight foreign stocks over U.S. stocks. That was the theme that we were talking about at the beginning of the year. We kind of had a little mean reversion to that in the short term over the last month or so. But I think that's a theme that is going to continue. And then actually, I think this is really good for crypto. Regardless of all the startups that are associated with, SVB or whatnot, I think, and I tweeted this out on Friday, the future of the financial system is a merge between blockchain tech and legacy finance. All that's going to happen, I hate to spoil the party, and this is just mainstream banking history. The banks are just going to buy up the crypto infrastructure, and then they're going to incorporate it to their own network. So you might see a Bank of America or JP Morgan, using outright blockchain technology in their banking, for transfers and fees and all that kind of stuff. I mean, this isn't rocket science. This is just typical banks. You know, they own the casino and they own the house. They are the house. And you know, when the opponent fails, you buy them up for pennies in the dollar. So that's what I think is going to happen. So that's what I think. I think this is good for metals, foreign stocks, and crypto.
So I had Big Beat over here, and he was basically saying that, you know, the Fed, you know, how many people have to lose their jobs. Could this perhaps change the Fed's mind and push us back in the other direction, or maybe make us a little more neutral than what we've seen the Fed recently?
I think in the immediate term, yes. You know, I saw, you know, even like a week ago, they were pricing in a 50 basis point rate hike. Then it was 25, and now it's kind of like a battle between whether they're going to stay flat, because they're supposed to raise rates next Wednesday on the 22nd. They were supposed to, at least. So if they stay flat, okay, fine. They might even ease a little bit this year. But here's the problem: is that if you go back to March of 2020, when they did the last round, when they started the last round of QE, that was very bearish for the dollar. It was very bearish for bonds. And if it's bearish for bonds, right now we're seeing a big short squeeze in bonds because you have the initial flight to safety trade. But at some point when the dust settles, I don't think bailouts are bullish for bonds anymore. You can't really sustain, like the Fed's not going to launch QE when inflation is running at 5%. The most they might do is pause the short-term rate hikes a little bit. We do have an important inflation number this week. If it comes in, you know, at or below expectations, they'll have exactly what they need to say, okay, we're not going to hike this month. President Biden was already kind of hinting at that last week, saying, hey, you know, I think CPI is going to be fine. So he probably, you know, is kind of, you know, teasing that a little bit this week. So, but what I'm saying is it's short-term gain, long-term pain in this regard. They're basically adding liquidity back. They're acting as a liquidity backstop, right? And so if the dollar sells off, it's going to reignite a stock market rally. The bonds are going to sell off eventually. And then, you know, there's a good chance we see inflation start to pick back up later in the year. So, yeah, I mean, I think you're right, Andy, that the Fed might take a little brief pause here, but by the end of the year, we could be singing a different tune again.
As a trader, you know, I would love to have that sort of action in the market. You know, anything where basically what we've been seeing, it's been amazing for me. I've been hitting this every single day has been a dream come true for maybe a few weeks at least. Yeah. I don't know, whatever we've been experiencing recently, it's been really great. And, you know, so I'm not against that. But as far as like the normal everyday Joe, I mean, I really don't want to. I don't know. I think that this is pretty dangerous times, especially with the banking. You hear people saying that, you know, banking in general right now, that get your money out. And then this morning, Biden said that they would not protect the investors, that's just, you know, how capitalism works. Yeah. It is how capitalism works. But, you know, it instantly we see hundreds of halts in the banks. And that's, I mean, at the nicest way to put it, it's slightly disconcerting.
Yeah, well, you know, the banks have some real issues, you know, and that's why I think, like, I've been calling it the merge, and, you know, that's a crypto term, like, oh, you know, like the new software or whatever. But I'm using this merge as a more holistic or wholesome term for finance in general, because, you know, the problem with banks is, you know, as the Fed was raising rates, you know, and it was 3-4%, the public didn't really notice. But now, and short-term rates are above 5%, and people are saying, well, the bank's paying me nothing. Why wouldn't I just open an account at, you know, treasurydirect.gov and buy risk-free T-bills earning me 5% on the year? So if banks want to stay in the game, they do need to stop interest hoarding. They're hoarding all the interest. And, you know, it was really a popular thing, you know, a year ago or so when inflation was on the uptick. You know, oh, price gouging this, price gouging that. Well, you know, nobody's talking about the banks hoarding interest. Why are the banks paying 0.5% on savings accounts if they're getting 5% from the Fed on the overnight rate? That's bullshit.
Yeah. So we got Beach Bum Trading here. Thanks for joining us so much. Gold back up over 2,000. I had seen that gold had popped. I had not seen that it was back over 2,000 yet. I'm gonna have to start trading gold a little bit more.
Almost.
And then also said, go ahead.
No, so gold's at 1914 right now in the April contract.
And then bank bailouts are potentially inflationary, which won't show in this month's CPI, PPI. You have any comments on that one?
No, that's kind of what we just discussed. Is I think short-term gain, long-term pain when it comes to the whole inflationary thing. Like I think the Fed could pause, but what are they doing? They're acting as a liquidity backstop. So all the policymakers are always shooting their mouths off, saying they're doing everything they can to contain inflation. But then when the rubber hits the road, everything they do is more inflationary in time. So we kind of got away with it in the 2010s when commodities were in a secular bear market. But even crude oil. I mean, keep an eye on crude oil. It's the primary driver of inflation expectations. It dropped all the way down to 72, low 72s today and some change. And now is up. It's up in the high 75s now. So that could have been a capitulation in crude oil too. If it was, then I think we'll see inflation reignite at some point in a couple months. It'll be very obvious, I think, that inflation's back. And that was kind of one of the themes we've been talking about. Is I don't think recession is the big risk this year. I think it's inflation, a resurgence in inflation. How can we actually contain that? And then we have a minor banking crisis, and then here we are. We're being inflationary again with our policies.
Yeah. So Strat Soldier basically alluded to the fact that drugs are bad. And that this whole entire QE, is just a bunch of drugs. And
it is.
So the market's high, the market's drunk, and we are trying right now to get the market off of these drugs. And right now with this bank thing and just the whole entire situation, we're facing a relapse. I guess, is that what you're saying?
Yeah. And so you're relapsing, and it'll feel good in the short term, and then long term, nothing's really going to change.
Yeah. So I mean. We don't think that we're going to start lowering rates again, but we could possibly see the Fed pivot slightly to a more neutral stance.
Yeah, at least for the next few months, I think. I mean, the price of crude oil is still down, over 30% from its high in March. I mean, it's been a year since crude oil peaked, and that's what I think the concern is that we had a couple of months in a row of higher than expected inflation numbers, while crude oil was declining for 9 to 10 months. So what happens if crude oil ticks higher again? We just backstop liquidity. Is that the catalyst to reignite the a bull market in crude oil and commodities broadly over? I mean, that's kind of what started it last time.
Well, guys, I mean, basically, I'm over here. I'm trading. I know that you trade price, Gianni, and a lot of people we have on here. They trade price also, but you're backing that with some really solid information. I am getting in here like a degenerate, and I am just basically trading whatever moves, when it moves, however it moves, taking the skills that I've developed through the way that I see this price action work and develop, and most of the time doing pretty well at that. But if you guys really want to get some more solid information behind your trades, definitely go follow Gianni. Go check out anything that he's doing. Do you still do live streams over at Benzinga? Because I did really enjoy those.
It's been a while. Every once in a while, Mitch will have me on his show, his swing trading show, and that's always fun to do. But it's been a little bit. Things have been a little crazy over here. So
yeah, I was referring to the webinars. You had some pretty cool webinars.
Several. It's been about a year since I've done one with them. So give him a poke and tell him you want me to do another webinar.
Definitely. I would love to see that. And any place that our audience can come check you out, and make sure that we can throw those links in the description. Where can they find you, Gianni?
Well, I mean, you can find me at Twitter. And my handle's on the image here, Gianni_DePoce. Then my main publications are with MMA Cycles, MMAcycles.com, and then Benzinga. You can find the weekly insider report that I publish every weekend. And, in Sunday's edition yesterday, I basically said, don't panic. I think the fears are overblown in the short term. And, before we jumped on, the Dow was in positive territory. I want to check here. NASDAQ's up, Dow's up, S&P's down slightly. So, you don't chase. I mean, we know that as traders, and it's a habit that you have to break when you get into this game. But this is why we don't chase. You have to, manage the risk reward, and the risk rewarded to the downside, I didn't think was very attractive over the weekend. So, you know, said, hey, don't panic. This is a good chance we bottom, and we'll see how we close today. But so far, so good.
Yeah, guys, I'm not really, you know, I'm not here to give anybody investment advice or tell you guys where you should buy or sell, but I am looking for price to hold above this, 38.8344. And, you know, as long as we can hold above that, and if we break above the 38.96.99, 38.97, I think that we could really make a run back towards the highs up at like 39.38. And then if from there, you know, it's just going to keep on going and be pretty nice if I get my way. But I don't always get my way. I get in here and things go totally the opposite of what I intended or wished for, you know, whatever the hope. I don't know. Hope's not a strategy, but Gianni, thanks so much for joining us. I love the information, man. You're turning me into a more responsible trader every single day. So I really appreciate you guys. Go check out Gianni, and thanks again, Gianni.
Pleasure as always, Andy. See you next week.
See you. Have a good one.
Later.